honestly didn't have a career plan that said I was going to go into venture capital. I had spent a great deal of my career as an entrepreneur. That had come pretty naturally to me because I came from a family owned business environment. But after selling the company that I had founded, I had been part of taking one company public. I had been a CEO, hired in CEO of another company, and then I was a founder and CEO of a venture backed startup. All of my career had been in the enterprise tech space. And it was a really interesting time because from the point in time when we closed the acquisition of our company by a public company here in the Bay Area to the point in time when I was actually free to go whatever, do whatever I wanted, 9/11 had happened. And so when I stepped back and asked myself the question, what do I want to do next? I really wasn't thinking that the right strategy was to go launch another startup. I was really ready in my career to start, the way I thought about it was leveraging my network and my skills and building a bigger portfolio than just one company, which is what I'd done every time before, put all my energy into one company. So it just turned out I was so incredibly fortunate. I started getting phone calls from many of the VCs I knew who were having issues within their portfolio that they needed help with. I went in as interim CEO a couple of times, but I always negotiated the opportunity to learn their business. And so really wonderful people like Kate Mitchell and Rory O'Driscoll at what Scale Ventures now helped me learn the business. I had a chance to apprentice with them and learn from them about how they did their jobs while I was doing other things for them. And that's what really gave me the idea that I would do venture at all. I had absolutely not planned on it. And then what happened pretty quickly is after doing a number of these projects with Moore Davidow and USVP and Scale and Bay Partners and others with Benchmark, I realized I didn't want to be on the outside looking in. If I was going to do this, I wanted to be on the inside. And so I had the really good fortune to be invited to join a firm that had an existing, very traditional Series A fund. It was called Outlook Ventures. They had a $140 million fund, 2 GPs that frankly needed someone to come in and help them in a variety of ways, not the least of which was that one only did consumer internet and one only did enterprise. And so they weren't always agreeing on which investments they should make, and they kind of a third party helped. Let's just put it that way. And they knew I was going to be entirely independent. There wasn't, some bias. Fast forward, I invested out of that fund effectively as a venture partner there, but leading my own deals for 4 years. Built some track record, and then finally took some crazy pills again in 2008 and decided that I would, on my own, launch what now we call micro VC funds or seed stage fund. So there's a lot of background there. I think the most fundamental reason to start my own firm really came down to who I am. I am an entrepreneur at heart. And so when I see opportunity, I want to seize it. I want to grab it. I don't want to wait for other people and lag behind in terms of doing things. And it was very clear to me in 2000 and let's say 6 and 7 that entrepreneurs no longer needed to have a $4 million Series A to get started. AWS, the whole Amazon cloud had happened. And from my own personal experience, I knew where my startup capital had gone. I had had to buy servers. I had had to buy database licenses. I had to host all of that at Rackspace and pay the hosting fees. And all of that was gone, 100%. You needed a credit card and some chutzpah, and you could start a business. And that to me was a signal that there was an opportunity for these much smaller seed stage funds. So I learned very quickly that starting a venture capital firm is really different from starting a technology startup. I had never done that second thing before. I'd never started a firm. I had never raised capital from limited partners. I had previously joined a firm that already existed and had a good LP base. And so, you don't know what you don't know until you jump in. And I had some great advisors, though, and people like Nancy Schoendorf and Cliff Higgerson, people who had both founded and been managing partners of venture capital firms for many years. And also people that were behind the scenes, like Bob Gunderson from Gunderson Detmer, who had probably helped form, I don't know, hundreds of VC firms. And I had those people as advisors, so I was lucky. And I decided that what I would do is what in the industry we call warehousing a few investments. I put my own capital to work in half a dozen companies over about a 2-year period, and then invited LPs to join me in what we now call our Spotlight Fund. It was a small proof of concept fund. And, at the time, of course, you couldn't tell how well that fund would perform. I had a lot of belief in it. But what I chose to do was allow anyone who invested in our first true seed fund, which was a $20 million fund, I gave them an opportunity to put a pro rata portion into our already existing, it wasn't a black box, set of companies in our Spotlight Fund. So that was attractive to people. And it was part of how we were able to bring in our first limited partner investors. There were a number of things that I realized in parallel when I was forming Illuminate. And one of those was that while there were a lot of dissimilarities between creating a company and starting from scratch and creating a firm, there were actually some really interesting similarities as well. One of those was that, as a founder and CEO, I had really leveraged something that we called our Business Advisory Council. We had, in my own business, had about 8 people in that group, and we didn't select people just for who could help me as a founder and CEO, but people who could help our entire management team. And so when we started Illuminate, one of the things that we did was we created something we call our Business Advisory Council. It now has more than 45 members. They all come from the enterprise software world, including many founders, prior founders. They are people who have sat on over 200 private company boards and over 100 public company boards. So these are very experienced professionals. And they are 3/4 of the members are from diverse backgrounds, more than half of whom are women. That is something that's taken 10 years to build since the inception of the firm. We started out with 8 people too, and then we grew year by year over time. And we don't add more people very frequently anymore. Maybe we add 1 person or 2 people a year, and perhaps we lose 1 or 2 a year because of their retiring or some other reason. But most of these people are also today LPs in our funds and provide incredible resources, not just to our firm, but to our entire portfolio. That's been something that I hoped from day one would be valuable. I don't think I had any idea how valuable it would become over time. So our investing strategy and philosophy is actually quite different from what you'll see from most seed stage venture capital firms. And even if you layer into that most seed stage enterprise or B2B tech firms, it is really quite different than the norm. And that unique approach that we've taken that I'll explain a little bit has actually enabled us to invest in companies that are lower risk and have a higher probability and a shorter time frame to acceleration. I can't say that I had this exact strategy when I first launched Illuminate. It actually has evolved over time. But out of probably midway through our fund one, and certainly all the way through our fund two that we're investing out of today, we have applied what we call a different lens. We believe we are entirely fishing from a different pond of entrepreneurs than most people. So what do I mean by that? As an example, we look at founders who are taking companies that are spin-outs, and we're really excited about those kinds of companies. We look at companies that have bootstrapped with no outside capital. We look at companies that have started out as IT services companies and identified a repeatable business problem that they keep building the same product for their client base, that want to productize that and build a SaaS business, and we target those. We also, by the way, are willing to manage through certain attributes that a lot of other VCs aren't willing to. Things like husband and wife founding teams, things like companies that are starting as LLCs and would like to stay that way for some period of time for tax reasons. Things like really diverse founders in locations all over the globe and that are more mature. You may not be aware, but there's been a lot of research lately, including some that was just recently published in Harvard Business Review, that shows that founders up until the age of their early 60s, the older they are, the higher the probability of the success. Not only that, but even higher probability in those companies that are high growth startups, not, I don't know, dry cleaners and bake shops. So that's all very interesting, people say, but I can tell you that the vast majority of my colleagues in venture would say husband and wife team, identical twin sisters, two brothers. We have all of those, by the way. A group of founders where none of them are under the age of 50. We have all of those in our portfolio. And they would say, I wouldn't touch that with a 10-foot pole. Okay. What we have found, Jennifer and I, we both have 20 plus years of operating experience as entrepreneurs and investors. And what we found is that many of these attributes are actually very significantly positive, not negative. And it creates a gap. It creates an area of unfilled demand or opportunity. And where there's that kind of gap, there's an opportunity for arbitrage. And we think we're really benefiting from that focus and taking a different lens. Well, we have a really long way still to go in terms of creating a truly level playing field and fully diverse tech ecosystem. I think that diversity needs to be balanced equally on the entrepreneur and the investor side and on the LP side. So we don't have any of the three yet today. We're a little bit stronger on the LP side than we are in the others. But if you look at the percentage of Latinos or Black entrepreneurs or founders, and women, of course, the numbers are just minuscule still today. I was hugely disappointed that in 2020, as a result, I assume, of COVID, that the actual dollars going into women-led companies declined significantly, and more so than they did in male-led companies. That was the first year, in fact, in many, that the numbers weren't at least incrementally climbing for women founders. So it was, for me personally, as a former women founder CEO myself, it was hugely disappointing. There are many, many things that we can do to work on this and to have an impact. And I think every single member of our ecosystem has an opportunity to have that impact. What we do at Illuminate is several different things. One, our business advisory council is 3/4 diverse. And now that I've just looked at the numbers, it's actually almost 2/3 women that are around that table. It happens to include, the CEO of Nextdoor, the CIO of Ring Central, founders of 10 companies that have had multi-$100 million and sometimes, in some cases, billion-dollar exits that happen to be women. And I mean, that's super exciting. And because of that, they attract talent that is more like themselves. We all do. We all have this natural inclination for that to happen. We also, from day one, have built something that we call our Student in Residence program. It's during the class year. It's not a summer internship. And we have students from 5 major campuses around the country that have participated. We now have over 70 graduates, if you will, from that program. 90% of them are MBA students when they're working with us. And they go everywhere out into the world. Some have started startups today, and some are in, Google and Amazon and other, companies. But every one of them had an opportunity to see what it's like to be an investor and how we talk with and work with entrepreneurs. So what was important to us from day one was to create diversity in that group as well. And more than half of those students have been women, and many of them come from extremely diverse backgrounds, including geographic diversity outside of North America as well. Within another area, which is our own portfolio, we have done everything that we know how to create a level playing field for entrepreneurs that are seeking capital. We respond, believe it or not, to every inquiry that we receive, whether we know the people or not. We sort the wheat from the chaff really quickly, which means a lot of them get a no very, very quickly. But unlike other firms, we actually take a look at everyone who's willing to share a pitch deck with us, and we provide that feedback. Our portfolio today is nearly half of the companies have at least one woman co-founder. 2/3 of the teams have significant diversity in them, meaning not all white males. And many of them have founders that are, again, from outside of North America who've built their careers and their lives here as well. And we're super proud of that. We have multiple Latino founders. We have, in fact, one of our most successful companies exactly was founded by Chris Cabrera, who's a first generation Latino founder and parents born and raised in Colombia. And that company first went public and then was acquired by Vista to become part of their platform portfolio.